All right, everybody. TGIF. We're going to get some inflation data this morning and some survey data. Markets don't seem to be too concerned on this. Small caps are up quite a bit. A little bit of a rotation there when you think about it. And Hong Kong down the most at just 0.25%. The NASDAQ is basically flat, while the S&P is up 0.25%. So we got a little bit of a divergence there. It shows this consumer sentiment as a high impact event, but all things considered, it isn't really going to matter if it's the consumer sentiment or the consumer inflation expectations, since they come out at the same time. Just watch the clock today. It's really what it comes down to. It was interesting to see the move in NVIDIA yesterday when Adobe reported and was making comments about artificial intelligence and the demand on AI, or the demand for AI. That may be something to kind of keep your eye on today. NVIDIA has been attributed with saving the market this week. And if there's anything calling that into question, we want to see some sort of reverberations of that. We still don't have Spot Gamma's AM notes yet, but we can see that the put wall has rolled up. That to me is a bullish behavior. When you see that rolled up, volume's a little light, all things considered. What we've seen over the last week or so with 100 and even in the 70s or the low 90s, and then today we're at 56. It's a little light. That ties in with the market maker move that we're seeing up here. Now, I've mentioned it a couple of times this week that next week we're going to be a bit blind because we're getting near the end of the contract. And so there's going to be trading in the front end. And that looks like a market maker move. It will signal this label, but it's not real, right? So we also have FOMC, and we got a lot of things on the docket next week, which is where we would expect that label to actually show up. So it's going to be kind of tricky. We want to try to find ways to clearly express that they are hedging in the front end, right? That doesn't maybe tie directly to their rolling because of the contracts. That's going to be hard to do. I don't know if we'll be able to even pull it off. Just be mindful next week that you're likely going to see that market maker move label all week, all day, throughout the entire day. And that will be a hint that it's fake. We have it this morning, and we have econ up to 10 o'clock. So the idea would be that if this isn't because of the roll that's coming, we'll see it start to fade after 10, and it's probably going to be gone by noon. If it's still here at noon into 1 o'clock, 2 o'clock, then we'll know that, okay, it's not signaling a hedge at all. It's just popping up because everybody's rolling their contracts out. The put wall being rolled up, I do consider that a bullish behavior, a bullish attitude, right? A bullish stance. I still want to hear from Spot Gamma, see what they have to say about it. And with the call wall now all the way up at 58, that is another what I consider bullish behavior. It also ties in with the turn that we saw in the gamma index from September 6th is where we bottomed, we turned, and we've seen the gamma index rising up since then. That'd be the zero gamma line. Been rising up steadily. The 21-day average daily range is starting to widen back out. It got down to about $70 as we were holding that range along the lows. Now it's starting to widen as we've had a couple of really big expansion days. We really don't have any edge this morning in trying to anticipate which side we're going to hit. As it's been over the last few weeks, the market is overly hyped on every minor little data point. My base case scenario for today is that we go into the close, keeping the gains that we've made and really not giving any back or getting any more. Now, this is a TRB setup, and a TRB setup owes us a move back to the top. So we could get to 56.50, maybe even overshoot it a little bit. But the liquidity zone is 57. Not really expecting that today after the move that we've already made, right? Almost 200 points in a few days. There's really not a lot of expectation that we're going to finish it off today. It is worth noting the possibility that we don't come back up into this 57 area and what it's going to mean from a pure price method. So all of this has been like a topping pattern, and a topping pattern does not have to resolve with a downside move. It can just be a topping pattern where we stop and we pause and we consolidate before we move on. Very much like back here. That was the same thing. We were developing a micro topping pattern. We pulled back, but in this bigger move, that was just like a 786 style pullback before we continued on. Then we had another pullback. We're just developing this topping pattern here. We can stay in this zone from 57 to call it 5,000 for the next year, 2 years. I know that's not what anybody wants to hear, but we could just sit here and chop for the next year or two. Look back in the past, we've certainly done it before, right? You'd have to expand the chart a little bit, but there's been, say, like most of 2018, for an example, where we were just staying in this range, or even something a little closer like 2022 when we went down for most of the year. And when we did start to come back up in 2023, we're still just inside the previous year. So we could just sit down here and chop. But for right now, we've got this lower high from this high. And the concern is, will this be a lower high again? Or are we going to come up and at least match the previous high or get above that? We don't know yet. We have to actually fall away before we can point to it and say that that's a lower high. Until we fall away, it's not yet a lower high. It's nothing. All we know for sure is that we have this higher low. So this needs to resolve. If we get a lower high, that means we've fallen back. If we start to fall back, we need to keep this low and set a higher low. From a pure price method, when everybody keeps asking, hey, what do you think the market's going to do for the rest of the year? Hey, where do you think we're going from here? Hey, should I hedge? We're still just sitting in this sideways state. And things that are bearish, like we had here at the start of September, 9, 3, 4, and 5, 6. These bearish moves had a lot to say. And this reflexive move back in the other direction, it may feel bullish because we moved 200 points, but these are wild, violent, crazy days. It is the very definition of volatility. Volatility comes from uncertainty and confusion in the market. So don't mistake this bullish pop over the last few days as any indication that everything's all fine and dandy and everything is good again. The central pivot today, higher than yesterday's. It's also more narrow than yesterday's, but it's not as narrow as we would want it to be if we were looking for a really good trend day. These channels are a good indication of the kind of day that we could get. And if it's a very narrow channel, then it implies if we attempt a breakout, that the breakout can get legs and we can really run. It's bullish that the channel is higher than yesterday's, and it's bullish that we opened with price above the channel. We also have an MDP from yesterday. That's a missed daily pivot. Price did not hit the pivot. And so far today, we have an MDP, but it doesn't count today. It only counts tomorrow. If you want to know more about that, you could just hit it up on YouTube, type in missed daily pivots. It's a trading strategy. I don't trade with that strategy. It just knowing it provides a way to perform some analysis with pivot points. So if the base case argument is that we're going to hold the line today, one of the things that I would expect is that we hit the pivot today. That would imply a move to the downside. We're not looking to crash and burn. Not even really looking to make half of yesterday's move, but it wouldn't surprise if we did that too. I mentioned multiple times yesterday morning that it's absolutely possible to have, 2, 3, 4 days in a row where we maintain a bullish posture or bearish posture. Just because we had a big day on Wednesday didn't mean we couldn't have a big day on Thursday. Well, the same is true again today. While I may be sitting here saying I think it's going to be a sideways day, markets can do whatever the hell it wants to do. And it's proven that time and time again. If it wants another bullish day, it's going to be another bullish day. So don't take it off the table and think we can't make another bullish day. Because we can, especially if they want to keep driving it and they're pushing it with the options flow. And people try to short that. Of course, the shorts get run over. They have to buy to close. It adds to the buying. It's more aggressive buying. Goes higher, goes higher, goes higher. $56.11 is a cog line. $56.32 is also a cog line. 5,600 is a round number, what I call an option number. So a level of interest. 55.92 is a cog line. That's a lot of cog lines. It's a lot of specialty lines, just all kind of bundled up right up here near this top. And when we look back, we've got a volume profile point of control. They're almost overlapping. So 2 weeks of structure around that 5632 area. They look to be a little bit in front of it. So if we continue this move up, we've got 2 weeks of profile point of control and then 5632. Above that, 5650, another options level. I think it's going to be really hard to get through this zone. That was those 2 weeks when we were sitting sideways, well, like 2.5 weeks. And then we finally broke down and came out of it. We're in it right now. We're in that zone, but we're not up to the point of control yet. That's going to be the danger zone for this continued move up. Getting through 5650 and then out the top here with 5632, the worst of it, the most critical part. For a fade back the other way, we've got the point of control at 5520-ish. And then last week's point of control at 5470, or I should say this week's point of control. I think that would be a bit extreme after the move we've already had today. And it's hard to imagine what the news would be that would get so negative that would take us down like that. It's absolutely possible, but we don't have economic data today that should be that kind of impact. I was talking with somebody yesterday about economic events, and they said, well, as a new trader, how am I supposed to know which ones are impactful or not? And that gets tricky, right? Because something that could be impactful this time may not be impactful next time. But on fxstreet.com, the economic calendar that we look at, it has this gauge here. And it's not perfect, but what it's doing is it's looking in the past and saying, well, the last time that this reported, did it make the market move a lot or not? Was there a big impact in the price action? So little impact is the really light color, some mild impact in orange, or a large impact in the darker kind of red. It's a good start as a gauge to try to get an idea. But there's usually blogs out there, and different headlines and articles that are talking about, hey, this is upcoming. We've got a CPI, a PPI, non-farm payrolls. This is what we think it's going to do if it hits or misses or comes in line. So the only way you're going to know is to go out and read, catch some headlines, look around, right? Try to stick with things that are from people that you understand, like Thinkorswim, IBKR, Schwab, not some Joe Schmo in his mom's basement, right? Not some clickbait junk that's trying to sell you something. And then just the experience of being a trader and doing this enough that you kind of get a feel for it after a while. But you'll never know for sure if the econ today is going to be a big mover or not. And one little tell that I like to use is how confident they are. Because if they're confident, the chances that they're wrong goes up. When I hear them saying, oh, we know what the job numbers are going to be. We know that the CPI is going to come in light or come in heavy. No, you don't. You've got a best guess And boy, they've been wrong in history, and they've made some radically bad decisions. And when they're off sides because they've made their wrong decisions, that's where the biggest moves generally come. So the market is shocked, it's on the wrong side, and everybody's scrambling to get on the right side. Otherwise, if you hear everybody saying that, oh yeah, FOMC, it's going to be a big one. We got FOMC next week. Don't forget. It's going to be big. The market's going to move like crazy. No, it won't. If it gets that scary, everybody will hedge it to the eyeballs, and it won't matter if it goes up or if it goes down. It'll hit their hedge. And what we end up with is a market that doesn't go anywhere. We get some violence in both directions and then nothing. Kind of like what these 2 days did, right? Big move in both directions. And what did we get at the end of it? Nothing. It just hit hedges in each direction. As for trying to anticipate, is the market going to go up when we get this data? Is the market going to go down when we get this data? Yeah, good luck with that. Because sometimes bad news is bad news, and sometimes bad news is good news. You have no way to anticipate how the market is going to take the numbers. I mean, we've got some good guesses, but it's about like trying to guess what we're going to get for earnings. 10-day, 30-minute volume profile, we're above it. It's the first time we've been able to say that in a while now. And we're far enough away from it that if we do move back, it's likely to act as a supportive structure. 55.21. It matches up with the weekly profile that we were talking about just a few minutes ago. We still have a discrepancy between the TPO and the point of control, but it's not too much of a concern, and we're above that one too. I don't know if you guys have run across him before, but JC Perez, he runs all-star charts. He's a smart dude, and he often cuts through all the noise with something simple. And I was flipping around yesterday and came across one of his tweets about the NASDAQ and semiconductors having this daily head and shoulders pattern. You know, everybody's bearish. Everybody's talking about yields and treasuries and how the government screwed us over again, and we're going into a recession. And it's just a tailspin from here, blah, 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 right? I'm sure you guys have all heard it. It's all negative. It's all doom and gloom. Guaranteed we're going into a recession, hard landing. I've heard this before, right? You guys heard that before? Because it sure sounds like a familiar tune. And 2022 lows, was it October, November in 2022 when everything changed and we flipped around and started running back the other direction, and everything that was negative and bad and boohoo and doom and gloom was suddenly wiped right off the board. And it's, oh, hey, I guess we're done being in a negative market environment, and now we're suddenly gonna go up again. Yay. It was right back here, right? Things were getting really bad. We had just broke that low, getting into a new low. There was a lot of negative things. There was a lot of bricks in the wall of worry, and it was, oh yeah, this market's cooked. It's done. It's going down. It's over with. Yeah. So we've been hearing a lot about that. And I guess my point to this is, as much as it seems negative and the hard landing's guaranteed and it seems solid as a rock, we're definitely screwed. Play the rotation. I kind of like what JC Perez put out there the other day. What if it's not? Because we're still going up, and we're still going up, and we're still holding these highs. So temper your expectations of the doom and gloom and the crashing and the burning until we actually start breaking levels to the downside. Profile today on the 5-day, 5-minute is very narrow, as it should be. We had a very narrow IB, initial balance. Point of control here on the TPO and the volume profile is below us. We're not seeing any signals across the highs that we had hit any sort of liquidity structure up there. We're waiting on data. It's exactly what it looks like. Yesterday's profile offers us a point of control that we have not hit yet. That's a VPOC. We also have more of a B shape here, but in profiles, they don't call that one the B. Usually it's the lowercase that they call a B. If it's looking like this, they'll say it's a double D because it's two different D profiles. And only one of them has the point of control, the lower one. But this is a bullish pattern too. And then having yet another VPOC under us is also bullish. Kind of like seeing the call wall rolled up. Yeah, that's bullish. And the put wall rolled up. Yeah, that's bullish too. Gamma structure rolling up over the last 4 days. Yep, that's bullish too. And we just got the AM edition, so I will get that shared out. The founder's note. Maybe they'll shed a little bit of light on these gamma prints and the new options levels. So I'm just kind of throwing it out there. Consider what if, right? What if it isn't such a negative crash and burn and they come in and play save a hoe like they've done before and they turn everything around and it's suddenly, oh, well, everything changed. I was crazy negative, right? But not anymore. We'll see. It is Friday. That means we have next week's box. We can gauge that against this week's box. Now, next week has FOMC. So we would expect next week to be a little smaller than this week because FOMC is volatility suppressing. I know that doesn't even sound right? Every time I say it, it's like trying to fight the urge to say no. FOMC is volatility suppressing. So when we look at next week's range, we can see that, yes, it is smaller than this week's range. The reason for this is we generally expect the market to go sideways into FOMC. We expect it to pause and wait for data. And if we're all paused and waiting for data, then we don't have any volatility and the range is really narrow. What happens after FOMC is a completely different story, right? Then we can break out and leave the box and expand all we want to. Oh, I already had one on there, but that's all right. We'll add another. So FOMC events, I think I'm missing one on here. I'm definitely missing some. Got to add some, but when it comes to how's the market move for FOMC, we can get a pretty good idea. This doesn't look very range bound, right? We got into that Monday and we almost made the entire week's expected move in a single day. And then the next day, we almost made the entire range again in a single day. That's some pretty big moves right in front of FOMC. Now on this week, for that FOMC week, Monday was pretty muted, kind of a sideways range, but it was still a breakout day because we had been sideways for like a week and a half into FOMC. And then that Monday, we finally got our breakout, follow through on Tuesday with another really big move, and then FOMC beyond that. My point here is we can always go back and look, hey, what do we do at the other FOMC events? But two, don't think that just because the expectation is that we're going to just go sideways and wait on FOMC, that we're actually going to not move at all. There's still plays. Here's Monday and Tuesday. This was a really muted Monday. And Tuesday we broke the range but came back in and it was still a muted range. This is one of the tightest IX10s that we've had on the ES, even with that wick down before FOMC. And it got pretty nasty. I don't know that next week is going to be as complacent and on hold as we normally would see. So I'm just going to lay that out there and stress a little bit of caution. Expect that we're going to be sideways. Expect that we'll hold the line and we won't break out. We won't break down. We won't go anywhere. But on top of FOMC, we've also got the expiring contracts and we got triple witching next week. OPEX. It's going to be a big deal. All right, well, we're waiting on data. We got nothing else. So watch the clock, be careful, be safe, have a good weekend, everybody. I will see you all on Monday.